and the practical tips to ensure accurate and timely filing. I encourage you to keep this interactive, and please feel free to drop your questions in the chat box or the Q&A box. I'll be addressing them towards the end of session. So basically, ITR is a form used by taxpayers to report their income, deductions and liabilities to the government. So there are few terms in the income tax which is commonly used. Maybe you are aware about those terms or you have heard them earlier as well. So out of them, like what is the previous year, what is an assessment year, different sources of income, what are the income tax slabs, what are the deductions and how we can claim that, what is the rebate for a resident individual in India, who should file ITR and why you should file your ITR, what is the income tax return forms, what is advance tax, refund and notices and tax audits. So we will be discussing all these things in today's session. So basically, what is the rebate? So the purpose of the rebate is to reduce the overall income tax burden for the people who are having low income range basically in India, and the government is providing significant relief to them as compared to the people who is earning like income at a higher range. So the rebate amount is in the old regime 12,500 rupees and in the new regime it is 25,000 rupees. And the eligibility criteria to basically option of this rebate is to qualify for the free rebate. Your taxable income must be fall below 5 lakh rupees in the old regime and below 7 lakh rupees in the new regime. When your income is below 5 or 7 lakh rupees only, you can have this option of claiming this rebate from the income tax department. And rebate is exclusively for the resident individuals and it doesn't apply on any kind of HUFs, company or other entities. Okay, so now let's discuss what is the income tax slab for the current relevant financial year for which we are supposed to file our income tax return before 15th of September. So the income tax slabs was different in both of the regimes, old tax regime and new tax regime. In the old tax regime, up to 2.5 lakh rupees, the tax rate is nil. 2.5 lakh rupees to 5 lakh rupees, this is 5% on above 2.5 lakh. Between 5 lakh to 10 lakh, it is 20% on above 5 lakh. And between 10 lakh to 50 lakh, it is 30%. And basically more than 10 lakh, 30% is the tax rate. But if your income is more than 50 lakh or 1 CR, you need to pay surcharge as well. So there is a slightly higher taxation which you need to pay. Similarly, in the new tax regime, up to 3 lakh, there is no taxation. 3 lakh to 7 lakh rupees, it is 5%. 7 lakh to 10 lakh rupees, it is 10%. 10 lakh to 12 lakh rupees, it is 15%. 12 lakh to 15 lakh rupees, it is 20%. And more than 15 lakh rupees, it is 30%. Plus, similarly, more than 50 lakh rupees once a year, you need to pay surcharge as well. Now let's discuss on the ITR forms. So basically there are different kind of ITRs form which completely depends upon your income range and what are the sources of income you are having. So there are total 7 ITR forms which is basically for the people who is filing income tax return in India. So ITR 1 is for those individuals who have income up to 50 lakh rupees from pensions, salary income, other sources of income. But the most important point here is that person should have only one house property, then only we can file ITR 1. So all the salaried persons cannot use this form for the their income tax return filing if their income is more than 50 lakh rupees or they are holding more than one house property in India. Similarly, ITR 2 is for the individuals and HUF who is having capital gains and having more than one house property in India or having foreign assets. ITR 3 is the form for individuals or HUF having income from property, business and profession. In that case, ITR 3 is applicable. ITR 4 is applicable for the business and professions who is basically basically having professional income or business income under section 44 AD, 44 ADA, 44 AE, income from one house property, salary income, income from other sources. But you cannot file this form if your income is more than 50 lakh rupees in a financial year. Basically, your income should be less than 50 lakh rupees, then only you can file ITR form for these presumptive taxation sections. ITR 5 is for cooperative societies, firms, artificial judicial persons, association of person, local authorities, for these kind of organizations. ITR 6 is applicable for companies, firms, organization can also use this ITR forms who are not claiming tax exemption under section 11. ITR 7 is the form which is applicable on political parties, religious or charitable trust, college, universities, etc. So basically any person who wants to file their ITR to the government has to decide in which category that person is following. According to him, then only that person can decide which ITR form is applicable. So there are few deductions which income tax department has given us to claim if we are filing our ITR in India. So because of these exemptions and deductions, our taxation will be at a lesser side. So in the chapter 6 say, here I am taking few examples of deductions. Like if you are having a home loan, you can enjoy tax benefit under section 80C of the principal amount which you are paying in a year of that home loan, and you can take benefit of section 24B as well of the interest repayment in a year. And basically there are different kind of government schemes like senior citizen saving scheme, Sukanya Samriddhi scheme, national pension schemes, PPF, national pension schemes, in which you can invest your money and you can save your taxes as well. And you can buy a life insurance as well. If you are buying any life insurance plan, then also you can claim the premium amount deduction under section 80C. For NPS, there are two sections, 80CCD 1B for a salaried individual and 80CCD 2 as well. In 80CCD 1B, if you are investing in NPS on your own voluntary basis, then you can claim deduction under that section, and the limit for that is rupees 50,000 in a year. Maximum is 50,000 in a year. And under 80CCD 2, if your employer is deducting any money out of your salary and he is depositing that money into the NPS account from basically employer side contribution, but out of your salary only, so that part as well you can claim deduction under section 80CCD 2. If you are buying any kind of health insurance, in that case you can claim deduction under section 80D for you, your spouse, your child, including your parents as well. And basically for family pension scheme, for family pension, if you are having any family pension income, then also you can claim deduction under section 5711A. And as I already told, income from interest from home loan is we can claim under section 24. So if you are having a self-occupied property, then you can claim interest up to rupees 2 lakh. But you are having a, if you are having a let out property, then there is no such kind of limit for the interest. You can claim interest, whatever interest you are repaying in a year. So basically now let's discuss who should file ITR. So filing an income tax return is not only a legal obligation, but it's also crucial for financial credibility. Those who must file ITRs. So mandatory ITR filing is for individuals and entities. Basically if you are filing your if you are having your income more than basic exemption limit, in the old regime it is 2.5 lakh and in the new regime it is 3 lakh. In that case you need to file your ITR compulsorily. For the companies, LLP, partnership firm, regardless of their profit or loss, they have to file their ITRs. Individual who is having foreign income or foreign assets has to compulsorily file their ITR. And if your tax has been deducted, for an example on your FDs or any other thing, and if you want that money back as a refund, in that case you have to file your ITR to claim that money back as a refund. Now let's discuss why it's matter. Because we have to be compliant with the law as well. So to be compliant with the law in India, we have to file the ITR. And basically if you want to study abroad, if you want, basically if you want to take any kind of credit, home loan, car loan, visas, for these as well, ITR is a proof. They will be asking for the ITR of last 3 years, 4 years. So to serve these as a proof, we need to file the ITR first. And basically to avoid any kind of penalties and legal actions as well, we should file our ITR. So what are the common mistakes which people generally does while they file their ITR? So basically we are not aware what is the personal expenditures and what are the business expenditures. So basically if we are claiming our personal expenditure in our businesses, so this is a very common mistakes people does while filing their ITR. And if we fails to pay our taxes on a timely manner as well, and if we pay like in a wrong section or with the wrong amount, or we deduct taxes with the wrong percentage, that is also a common mistake. And if we basically over claimed our deductions or exemptions, so that is also a mistake which people generally does while their ITR filing. And basically missing deadline, that is a very common thing. If we miss our deadline of ITR filing, so basically in that case also there are few penalties and government legal actions as well we have to face. And as I already wrong form as well, this is the common mistakes because we are not aware in which category we are following out of 7 ITR forms. So that is also a common mistakes that we should avoid while filing ITR. Now let's discuss common myths and misconceptions in ITR filing. Okay, so myths are, if people think if my employer has deducted TDS, I don't need to file the ITR. But it's not right. If your employer has deducted TDS or not, it doesn't matter. If your income is more than basic exempt, in that case you have to compulsorily file your ITR. You have to report your not only salary income but other sources of incomes like capital gain, house property income, any other sources of income which whatever you are having, to income tax department. People think that only rich people needs to pay income tax. I am having lesser income, why I should pay income tax or why I should file my income tax return? But it's not right, because income tax is applicable according to your income sources, your income range, your investments, whether it is in India or outside India. It doesn't have any connection whether you are a rich or whether you are basically not in that category. It completely depends upon your income range and your income slab as well. People think that I can't file ITR if I miss my deadline, but it's not like that. If in a worst case scenario you miss your ITR filing deadline, still you have chance to file your ITR as a belated return after the deadline as well. So basically 31st December of the same assessment year is the due date on which you can file your belated return, and you can be yourself in a compliant way. People think that gifts from family or friends are always taxable, but it's not like that. There are few sections in the income tax, section 56 of the income tax, in which if you are receiving any gift up to rupees 50,000, and there are certain other criterias as well. If you are following in that criteria, in that case your gift will be completely exempted. You don't need to pay any taxes on that. And basically, one common myth is that investing in the tax saving schemes is optional, but it's not an optional thing. You should invest in the tax saving schemes, because if you can invest your money in a good scheme, you will be having a good rate of return from there, plus you will be saving taxes as well. So you are in a win-win situation if you are investing in a right scheme, right amount at a right point of time to save your taxes to having a good income as well. So these are the common myths which people think that, but they are actually myths only. If we have clear understanding about income tax, about the department laws, then we can avoid these myths and we can file in a legal and compliant way as well. So basically, so in the basically in the Uniqey by GJTax, this is the business check review which we have. So if you want your ITR to be filed in a legal and compliant way with the correct reporting of income, without any failure of reporting income or without any failure of paying taxes, if you want yourself to be in a safer side of your income tax return, Uniqey is here for you. You can file your income tax return through us from our experts, who is basically expert in their basically return filings and after return filing compliances as well. So you can basically in this business check review, there are different kind of services as well which we are providing, not only for the income tax but also for the legal, for the compliances, for other works as well. We are providing services. So thank you so much for your attention. We are now open for the Q&A. If you have any questions, feel free to ask them. I'll be happy to answer your queries to the best of my ability. So here we have a question: do I still need to file ITR if my income is below the taxable limit? Okay, so yes, as I already told, we have to file ITR if our income is less than taxable limit as well. If we want any benefit of, if we want to take any kind of loans, or if we are having any visa related formalities, or if we want any refund from the government, in that case, if your ITR is if your income is below taxable limit, you have to file your ITR. Second question which I have is, can I file ITR after the due date? Yes, you can file your ITR after the due date as a belated ITR till 31st December, but there are some benefits which you will be losing if you are not filing your ITR on a timely manner. For an example, if you have some losses and if you want to take benefit of those losses in the upcoming year, so you will not be able to carry forward that losses, and you will not be, that is example of loss which you will be bearing if you are filing your ITR after due date. So I would recommend you to file your ITR before the due date only, so that you will be having other benefits as well. Next question we have: can I carry forward losses if I file ITR after the due date? Yes. So basically, as I told, if you are filing your ITR till the due date only, in that case you can carry forward your losses, you can adjust them in the upcoming financial year with the gains which you are having. But if you are filing your ITR after the due date, in that case, sorry, but we can't adjust our losses, we can't carry forward our losses in the next year, and we can't adjust them. Next question I have: what are the consequences of not filing ITR at all? So basically, if you are not filing your ITR and if you are having income more than basic exemption limit, so there is a higher chance you will be in the eye of the government, you will be getting notice from the department, and legal actions can also be taken on you. Next question I have: what happens if I don't file my ITR on time. So yes, if you don't file your ITR on time, still you have time. In the belated return, we can file your ITR, and you can be in a compliant way. Okay, so that's it for today. Thank you so much everyone for joining this session.